Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss levels in the Nasdaq-100 and Vol-Q, the volatility index that tracks the Nasdaq-100. Shawn, welcome back to Trade Talks. Let's review your first couple of charts here, looking at fresh levels in the Nasdaq-100 and Vol-Q.
We are, and so we've been keeping an eye on some of these levels as we get a little bit more of this sideways choppiness. Maybe there's a little bit of a pullback, but nothing I would say worrisome. It's really interesting to start and see which levels can hold. And the next level we're really looking at on the downside is right around that 12,860 level. Somewhere around there is where I'm looking at for near-term support. The other thing I'm looking for, just more generally speaking, out of the index is some of these intraday ranges that we're seeing. You just notice by looking at the candles. Those candles came pretty long there. But if you look at the intraday range, we sort of spiked up the first couple of sessions as there's a little bit more regulatory risk coming into the picture. I think that's going to be a little bit of a driver of volatility. But as long as we can start to see these intraday ranges come in, and we're starting to see that a little bit after those first two big spikes you see on that lower study, we've sort of started to get into a little bit of a tighter range over the past 3 sessions. And as long as we can continue to see that come in a little bit, I think that can actually be what drives historical volatility lower, which should feed over into forward-looking volatility, or that Vol-Q measure. But just looking at that measure as well, it is moving around within this range. As long as we stay inside of that range, that's more consistent with the story we're looking at in terms of this sideways choppiness. If you really see it break out, and I'd say break out above that 28 level, that might be a sign that there is some genuine fear, some genuine risk-off mentality coming into these big tech names. But right now, it just looks like a little bit more choppiness day-to-day driven by headlines. So nothing to really worry about just yet. So I'll start to look for some of those tighter levels, like we talked about, 12,860 around there, to hold it in service support moving forward.
A bright spot has been the semiconductor space. What's driving the upside momentum?
I think it was interesting going into the incredible performance some of these names had in 2020. You're starting to see some analysts come out and start to ask if these things are starting to get priced to perfection, saying, look, the cloud trend is already being priced in, the build in gaming from everyone staying home buying gaming systems, whatever that might be, is starting to get priced in. But now you're starting to sort of see where the second tailwind, or the second part of the story, can come from for these chip makers. And we got an indication of that yesterday, and that's really in this electric vehicle autonomous space. And NVIDIA came out and announced a partnership with NIO as the big processing unit for their new autonomous vehicles. I think that could be another area to look to moving forward as we start to see this electric vehicle space, this autonomous vehicle space, really become an interesting story that continues to develop. And it's really interesting because it's not just taking the same players that we're used to hearing. We now have Apple into the mix. We've heard GM and FedEx coming into the mix. This is going to be a very big story, I think, for a lot of these tech names. And no matter who's doing it, you are going to need those chip makers to provide the processing power to do it. So that could actually be sort of the second win for demand coming for these chips, on top of what I expect to be continued investment in cloud infrastructure. Maybe not the pace we saw last year, but should certainly maintain that pace moving forward.
Yeah, we heard a lot of those themes at CES, but I'm glad you brought up NIO. I read this morning and it kind of blew my mind a bit here. Investopedia pointed out an interesting tidbit in this morning's newsletter: 111 million shares. That's the average daily trading volume of NIO, the ADR stock in the US. Markets over the past year, this is according to Dow Jones data cited by the Journal, making NIO the second most actively traded stock during this period, trailing, Shawn, only Apple. So it really does show the level of interest in what these companies are doing as they look to expand in the EV space. So I'm glad that you brought that up. But let's wrap with the US dollar and inflation. We're starting to see the impact in commodities pricing.
We are, and I think that can be another story to focus on, and that is this inflation narrative, be it from increased stimulus, another infrastructure bill that could come after a potential stimulus bill. The thing to focus on here is that with sort of a Democrat-controlled government, you may get some larger bills through it. If you want to maybe have something to reference, think back to early 2020, you had that $4.3 trillion HEROES Act that wasn't able to get it through a Republican-controlled Senate. So now maybe we can get something of that magnitude through a Democrat-controlled Senate. Now that you have the White House, and now the Senate all in the same party, I think it could maybe lean towards larger bills versus some of the more modest bills that we were getting, especially the one we had more recently. So that actually drives a sort of inflation narrative, which is pushing yields higher. And the interesting thing here is, what will that do for dollar? Because higher yields typically do attract Forex inflows. So we're seeing that come into the dollar. I think the potential for a US recovery is also driving some optimism for the dollar. But the interesting thing to look at here is looking at the 10-year, 2-year treasury spread. That's actually widened out to the widest we've seen it since 2017. And the reason for that is, as these inflation expectations are pushing up longer term yields, you still have a Fed that seems to be anchored at keeping rates at least at the short term lower. So that's going to anchor the short end of that curve, and you're going to have inflation maybe driving up the longer end. So it'll be interesting to see how this plays out. I think it'll be a benefit for financials, but it certainly could be something that is going to have some impact on commodity prices. We've seen some interesting moves out of crude oil. We had a pretty big drop in gold recently. I think a lot of that had to do with some of the strength we're seeing in the dollar as well. But it's going to be a story to track here as we get into the first half of 2021.
I would agree. Shawn, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.